The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we closed out 2024, Tuesday's trade action, surprisingly, with a U.S. dollar index moving higher again to close out the year. We did find some green on the screen in the grain markets, soybeans in particular. Well, it was a more mixed bag of the proteins, with cattle a decent day to close the year, hogs not so much. Let's take a look at what's happening in the markets and get some thoughts and perspective as we're nearing the end of the holiday window and moving into a new year. Joining us now, Jim McCormick with agmarket.net. Jim, Happy New Year to you and yours. Thanks for joining us here today. Hope all's well.
All's well. Happy New Year's to you, Jesse, as well as to your family and your listeners.
Thank you very much. Appreciate it. A few days away for the holidays, and I kind of removed myself from the markets a little bit, and then I got back to looking at things to close out the year on Tuesday and kind of catching up on some things that have happened. And you know, I wouldn't say it was a massive type of Santa Claus kind of rally, but you know, we did okay through the thin holiday kind of window here. I mean, you're getting corn above 450, soybeans getting back up into the tens in many of these contracts on the board. I guess 1,000-foot view this for us, Jim. What are some thoughts you have as we close out the year and kind of get through our holiday window?
Well, there's no doubt about it. We definitely had a little bit of a Santa Claus rally. We definitely had a nice little run here in the last week and a half. Like you said, we've pushed corn back up to the prices we haven't seen for several months. Several things that are driving it. Let's talk first the funds. The corn first. Let's go and let's say the funds. The funds right now, they're long around 150,000 according to CFTC, but the private estimates put in near 200,000. They are doing the heavy lifting right now. If you're a cash grain trader out there, you might notice a lot of places the board's going up, the basis is weakening a little bit, so the board's doing the heavy lifting. We are hearing some consumers or end users have got at least 45 days priced out. Some are even double to triple that. So the farmer has been selling into this rally. And, one thing, Jesse, we thought as an industry, we might see a lot of aggressive farmers selling when we flip the calendar to 2025. With the rally we've seen here in the last few days, I think that might have mitigated some of that selling, but we definitely have heard a lot of bushels being moved. Now, the real question is, with this length in the funds by around 200,000, is the estimated length, as I say, are they going to be able to push it? Now, that is not a record length, but by historical measures, it is a quite big position. And, the real question going into 2025 is, are they going to be able to maintain that and increase it? Or are we just going to see kind of a cycle reversal? Because that all comes down to the demand aspect. The government did raise demand in the December report, 50 million on the ethanol, 150 million on exports. The argument has always been in the industry, is that new demand that was better than what the government was thinking, or was that front-loaded demand due to preemptive trade war buying? No one really knows, Jesse. There's a lot of debate within the industry, but it's all opinions. That is the reality. We will get a better picture come January 20th when President-elect Trump gets elected or gets inaugurated and then we'll see what these policies do, and then we'll see how the rest of the world reacts, if this was truly a front-loading situation or a change in buying habits.
Absolutely. How about in the soybeans here? Let's jump there real quick, because then I think we can come back to talk tariffs and the dollar, et cetera, et cetera. But I mean, you look at the soybean picture. I mentioned, we're getting some tens back on the board here, but this soy complex has just been so bearish this really the last quarter of the year, if not more. Jim, I mean, what's your perspective in the soybeans right now?
Well, there's no doubt about it. The beans have just been beat up here the last quarter of the year. A lot of it was the meal, Jesse. You look at the price of meal. If you would have sold it at the beginning of the quarter, it was a straight down left, or top left to bottom right, move down on the chart. Well, here as we got into the holidays, we had meal at prices we hadn't seen since the COVID lows. The funds are carrying an all-time short position in that meal. And what it felt like is, like you mentioned, a lot of people went away for the vacation. They just parked their buy stops above that meal market. So as that market started firming back up, these funds who were carrying this massive short are getting knocked out of that position, which is fueling it to go even higher. And that kind of spilled into the beans a little bit. What was the fuel? It is some dryness issues in Argentina. Argentina is a little bit dry right now. It's getting a lot of play in the press. It's something I think we need to watch as an industry. But the fact of the matter is, they're still right around 80, 85% in their planted right now. So they're not in the critical phase of their growth cycle. So if we start getting rains in Jan, Feb, March, they could easily have a big crop. The Brazilian crop is looking like it's going to be a monster crop. The government's at a 169 crop. There's private guys closer to 175. I've heard a few closer to 180 when it's all said and done. So the world without even a smaller Argentina crop is going to be well supplied. So that Argentina weather scare, that fun short covering drove the bean market up. I would argue they gave the farmer a gift to go ahead and try to move some grain, maybe sell some new crop beans now that they're back over 10, because the world will be oversupplied with a trendline yield in Brazil. And even old crop beans, the fact of the matter is we're past our window where we sell beans, Jesse. That window shifts to Brazil aggressively in January. And when you look at the price of the dollar, compared to the price of the real, we've lost all the economic advantage to sell beans to the Chinese as well. So I think the bean market is set up to struggle here as we get into the Brazilian harvest.
And that's a point you bring up here, the dollar. I mean, the dollar at near 2-year highs to close out the year, yet you're seeing some of these grain markets continuing to rally with a high dollar, but the worries about tariffs and more, high dollar in itself limiting exports. I mean, does that say anything to you that, grains are rallying despite this 2-year high in the dollar, or is it just a coincidence of thin holiday trade and weird things happening? What do you think, Jim?
Well, I think it's a combination of everything. Now, because you remember, the dollar has an impact, okay? And if you're looking at it, you're going to buy from either U.S. or you're going to buy from Brazil. All things equal, the dollar is going to have an impact on your buying habit. Okay, if our dollar is expensive, Brazilian currency is cheaper, the Chinese are going to go to Brazil. But on the other hand, if you need the product, okay, if you need that beans, and the Brazil can't give you beans in December because they're out from last year's crop, it really doesn't matter how high the dollar is. If we're the only seller in town, I'm going to pay that higher dollar, be danged, and I'm going to buy the beans I'm going to import. And we've seen some of that. And that's part of that question on the demand aspect. Is this demand all front loaded? Even though the dollar was going up, were you seeing importers who normally say, look, I don't like the higher dollar, but I'm more fearful of a trade war with President Trump in my country as opposed to the higher dollar, and they just ignored the higher dollar. So the higher dollar will have an impact, but it may not impact the day-to-day, but it will have an overarching theme, if it continues into 2025.
Jim McCormick with agmarket.net is our guest analyst here today as we close out 2024 and look ahead to 2025. Jim, I guess let's go down this path a little bit. You talked about maybe some of the old crop sales here recently on the rally ahead of the new year. And to your point, traditionally, we tend to see a lot of farmers wait until the calendar flips over to a new year for tax reasons to sell some grain, et cetera. So I wonder, though, looking at new crop, 25 corn, 25 beans, Dees corn, Nove beans, say we get to 450 Dees corn here sometime early in January. You mentioned Nove beans are over the $10 mark. With farmers starting to figure out what they're thinking they're going to put in the ground in 25 in the U.S., do they start thinking about some forward moves, 10%, 15% of what they anticipate? I mean, what are your thoughts on this new crop situation right now?
I think you got to get a little bit, I think you got a marketing rally you're going to see, especially in the corn. Here's where we're at in the corn. We've had a pretty good run in the corn. The funds are carrying it. It's probably a little higher than a lot of people thought it could be. But as we move into 2025, Jesse, when you start doing the balance sheets, for the most part, the beans just look really, really bad. They could look really bad in 60 to 90 days if Brazil has this monster crop that I fear. So we think we're buying corn acres. The corn market has moved enough to buy acres. Some of it is just pure default because of the crummy bean price, even at $10. You're not generating enough revenue. You're not going to get enough yield at $10 beans to break even. So we're looking closer to 95 million acres of corn. I think it could be even higher than that. 95 million acres seems like a lot, but remember, just 2 years ago, we planted 94.7 million. So you're just swinging back. And now look what happened. Well, the federal government did that farm bill emergency aid, which how I believe that right now is what that's going to do is do two things. It's going to help pay down debt for people who are in a weak fiscal position. And the ones who weren't in maybe quite as a weak fiscal position, you just gave them money to pay for fertilizer. So I think we're going to plant 95 million acres of corn, because when you look at that balance sheet, 220, 230, just the potential good corn yields is going to get you at break even or better. So we're going to get a lot of corn acres, I fear. And if we get 95 plus million acres of corn and we have a trend line yield, we're going to bury ourselves in corn potentially. So 450 is not a great price, but it could be a whole heck of a lot worse 6 months from now if we have trend line yields. So I think you got to start, if you're a producer and you haven't started looking at 2025, I think you got to take a serious approach to it if we do get this early 2025 rally.
And we've talked about a lot of times before. I mean, if your first sale is your worst sale, I mean, there's that aspect to it as well. And I wonder, as we look ahead to January 10th, we got the USDA report. Typically, the January USDA report is a very big one, a very volatile one. I mean, initial estimates you're seeing, thoughts you're hearing, Jim, could that throw a monkey wrench into all of this? I mean, what are your feelings heading into that January USDA report?
Well, on the demand side of the equation, when you look at the bean demand, we think the government's been very accurate on the demand for the beans. So I think the demand's going to be okay. The corn demand, like I said, there's a lot of debate. Is it front run? Is it not front run? We're not going to have enough data 10 days from now to know that. But they've been very aggressive raising demand here in December. So I think they've taken the demand revision up off the table. So it's all going to come down to yield. And there's a debate, heck, Jesse, there's a debate even within our brand, within agmarket.net. What is the government going to do with that yield? There's a line of thinking that, hey, this late season heat took the top end off the corn crop, and that's going to show up in the January report. And that's where the bullish surprise is going to be, is the government's going to lower that yield. The pushback on that is we had one heck of a fast harvest. A lot of farmers were done by mid-October into November, okay? So when the government gave that November yield adjustment and put that crop where they did in November, we should have had, I guess, 95% of the crop data was in. So are we going to be surprised and get a surprise downward revision? We haven't got the private estimates yet, but that I think is going to be a real debate, is where do they put the yield. But one thing I'm going to caution people about, that said we do get a yield revision. Once we get that yield revision on January 10th, I'm not certain what's going to take us the next leg up. The funds are long, like I said, estimated 200,000, 10 days into the report. You get a bullish report, folks. The next question is, what's going to get you to push that fund from 200 to 300,000? It's probably going to be a weather problem. Well, the fact of the matter is the next weather problem for Brazil's the safrinha crop. They don't even plant it till late spring, and then our crop. So, this could be one of those years where we top the market maybe on the report, or maybe top it right around the holidays. It's something, like I said, if you would rally into the report or get a bullish report, I would definitely try to take advantage of it. Sell some cash grain, do some forward contracting, use the markets, but I would lay off risk, because once we get the the report on Friday, we trade a week, and then that next Monday, Martin Luther King holiday, President Trump gets sworn in. And he has told the world constantly he is going to do a lot of executive orders, which could include his, trade tariff war, could all come to fruition on the 20th. So if you can lay off risk before that uncertainty, because none of us know what he's going to do. We don't know how the rest of the world's going to push back on what he's going to do. And we have no clue how the world traders are going to react to those two pushbacks. So if you can mitigate risk and lay off profitability when you have the opportunity, do it.
Absolutely. How about in the livestock sector? Closing out the year, cattle finding some green, hogs, a little pressure there. I feel like we've tested some support at $80 in Feb hogs, for instance. But I mean, you just look at this overall picture and you look at demand for beef, pork, etc. I mean, any thoughts in this protein sector as we head into 2025, Jim?
All right, let's start with the hogs. Hog market looks like a head and shoulder top has been put in. We broke the neckline yesterday. We did test the moving average support and bounced off of it today, but the chart pattern suggests we have more downward pressure to go in the hogs. On the cattle side of the equation, overall, the cattle market's hung in there very well. We know the supply is tight. We've known that for months now. The question all comes down to demand. Can the consumer continue to pay up for this high-priced cattle? That'll come down to the economy. We are hearing reports that consumer defaulting on credit cards is moving back toward near all-time highs. So we are starting to see some cracks in the consumer. So that is a red flag. And then lastly, Jesse, we're not hearing a lot of people talk about it. I want to bring it to the attention of the people out there. Bird flu. It is out there. It is really becoming a problem. On the dairy side, 75% of all the dairy herd in California has now been infected. 3 to 5% of all dairy cows that get the bird flu die of it. So we know we got a problem there. But the other thing is we are seeing every day infections in the chicken flock, in the egg industry, as well as the bird industry. This continues to spin out of control. We could see the bird flock situation really contract, and that could that could force some demand, I would argue, into a pork, kind of the next cheapest protein. So something to keep an eye on. Like I said, it's not getting a lot of press, but it has become a real problem, I fear.
Absolutely. Well, of course, got a lot of press initially, and then to your point, it's kind of died away on the back burner. It feels like as we close out one year and move to the other, a lot of the same issues that we had in 2024 are still here for 2025, at least as we begin. Anything final, Jim, you would share with folks here today as we close out the show?
Oh, we've definitely had some challenges in 2024. 25 is going to give us some challenges, but there's also going to be opportunity out there. And I'm going to encourage people to look for the bright side, try to look at that glass half full. Like I said, the pricing structure right now is not the best, but there's going to be opportunities. But, the opportunities are there when you plan for them. So I'm going to encourage everybody out there to, when you've got time during the wintertime, figure out your cost of production, figure out your break evens, and get those orders working. The one thing we do know after 4 years of having President Trump as president, a lot of things happen overnight. He likes to use social media to make announcements of policy, and that is going to probably add a lot of volatility in 2025. Get your orders working because you never know. You may be asleep and get that wish order filled. So, game plan now, plain and simple.
Absolutely. Well, I think a good way for folks to start the year too. Early February, you guys are having your conference down here in my backyard in Nashville. Give us a plug for that real quick, Jim.
Yeah, it is first weekend of February, Sunday, February 2nd, and Monday the 3rd. Go to agmarket.net to sign up for it. The hotel specials end, I think, on January 18th, so we are filling up here relatively quick. Jesse, I'm going to plug Jesse. Jesse is going to be accompanying our cocktail party with some of his singing. So please, if you don't want to come listen to the Ag Market guys talk about the markets, Jesse's going to be here to entertain you. He's a great singer. So I'm going to encourage you just to come and, support Jesse. And, it's going to be a great time. A lot of information out there. And I'm going to encourage everybody to make it if they can.
Well, you guys have an awesome lineup, and maybe we'll have a few cocktails on the Sunday night there for the cocktail hour and have a good time. And then a lot of great information through 2 days. Agmarket.net for more. The Farming for Profit, Not Price Conference going to be in Nashville in early February. Jim McCormick with agmarket.net. Good to talk with you again, my friend. Happy New Year, and we will talk to you again real soon. Appreciate it.
Thank you, and Happy New Year to everybody else.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.